Hello and welcome everyone to my channel Banking Digits. My name is Shoikat Maji. In today's video, we will understand documentary collection in trade finance. We are going to divide today's topic into 6 chapters. Overview of documentary collection, types of documentary collection, process, what are the common documents involved in this, advantages and disadvantages, and at last I'll be sharing some tips for successful documentary collection. So, first chapter is overview of documentary collection. Here, we will understand what documentary collection is, how it works, and what are the international governing rules for documentary collection. Documentary collection in international trade is a payment method where the buyer's bank or importer's bank helps to facilitate the exchange of documents and payment between an exporter or seller and importer or buyer in different countries. It involves the collection and handling of important documents related to the trade transaction. Please remember here that banks never deals with the goods in this process. Bank only deals with the documents and facilitates the payment. Now, just check below step-by-step process of a documentary collection. Please note, we will discuss about this process in detail in the chapter process of documentary collection. Here I am just telling you only summarize points just to understand. First, the exporter ships the goods and prepare necessary documents like invoice, bill of lading and other trade related papers. Then exporter hands over these documents along with the draft like an invoice for payment to their bank. Then the exporter's bank sends these documents and draft to the importer's bank through the banking system. Then importer's bank notifies the importer about the arrival of these documents after receipt of these documents. Now the importer reviews the documents to ensure everything is correct and matches the agreed terms. At the final stage, once satisfied, the importer either pays the amount mentioned in the draft or accepts the draft, promising to pay on a later date as agreed. So, by going through the process, we understand documentary collection is like a middleman ensuring that the goods are correctly documented and presented to the importer. It adds a layer of security as the importer only receives the documents upon payment or commitment to pay, while it's less secure than a letter of credit. It offers a cost effective way for buyers and sellers to trade internationally with a level of assurance. Now, it is very important to know what are the rules that govern documentary collection. The rules governing documentary collection are established by the International Chamber of Commerce through its Uniform Rules for Collections or URC 522. So, whenever there is any kind of conflict between buyer and seller or the banks involved in this process regarding payment or regarding documents handover or regarding any other roles and responsibility, we need to refer URC 522 to find out the solution. Next chapter is types of documentary collection. Documentary collection encompasses two primary types. One is site collection and time or usance collection. These variants provide distinct approaches to balancing payment security and flexibility in international transactions. So first is site collection or DP. Here DP stands for documents against payment. So site collection involves the presentation of documents to the importer with the demand for immediate payment. Upon receiving the documents, importer must review them and makes the payment promptly, ensuring compliance with the agreed upon terms. This method offers a high level of security for exporter as they receive payment before the goods are released to the importer. Site collection especially useful when there is a well established trust between the trading parties or when the exporter seeks assurance of immediate payment. So why trust is required here? Because when exporter receives the payment, by that time importer does not know what will be the condition of the goods. Importer can release the goods from shipping companies only when they have made the payment and collected the documents from bank's counter. Now, second type is time or usance collection, which is also called DA or document against acceptance. Time collection, also known as usance collection, introduces a degree of flexibility into the process. In this approach, the exporter presents the document along with a draft that specifies a future payment date. The importer accepts the draft, signifying their commitment to make the payment on the agreed upon date. This method allows the importer additional time to arrange funds, making it suitable for larger transactions or instances where payment may not be immediate. Usance collection strikes a balance between security and flexibility, benefiting both parties by providing a structured yet accommodating payment mechanism. So, the choice between site collection and time collection depends on the nature of the trade transaction, the relationship between the trading parties, and their preferences for payment timing. While site collection offers quick payment and heightened security, time collection provides more breathing room for payment, enabling importers to manage their finances effectively. Next chapter is process of documentary collection. Before we start the next chapter, I'll pause for a while. Just wanted to inform you that if you have any questions or doubt regarding today's topic, please feel free to ask in the comment box. I'll try to explain whenever I'll get time. And please like the video if you are getting any benefits from this video. Now let's start the chapter. The process of documentary collection is a crucial element within trade finance, enabling smooth and secure exchange of goods and funds in international trade transactions. This process involves a series of steps that ensures the proper handling, presentation, and verification of essential documents by banks and trading parties. Step 1. Exporter prepares documents. The process begins with the exporter who is shipping the goods, gathering and preparing necessary documents. These documents typically include invoices, bill of lading, certificate of origin, packing list, and any other paperwork related to the transaction. Step 2. Documents submitted to exporter's bank. Once the documents are prepared, the exporter submits them to their own bank, which is called remitting bank, along with any other required instructions. The exporter's bank reviews the documents to ensure they are complete and comply with the terms of trade transactions. Step 3. Exporter bank sends the documents to importer's bank. The exporter's bank then sends the documents to the importer's bank or collecting bank through the appropriate banking channel. This process may involve physical shipment of the documents or electronic transmission depending on the bank's capabilities and the transaction's complexity. Now, step 4. Importer's bank notifies the importer. Upon receiving the documents, the importer's bank notifies the importer about the arrival of the shipment and the documents. This notification serves as an alert to the importer that the goods are ready to be released upon payment or acceptance of the draft. Now, step 5, importer reviews and response. The importer reviews the documents carefully to ensure their accuracy and compliance with the terms of the trade agreement. This step is crucial as any discrepancies or inaccuracies may lead to delays or disputes. The importer then makes a decision on how to proceed. There are two ways. First is by payment. If the documents are in order and the importer agrees with the terms, they make the payment as specified in the draft. In case of documentary collection with the draft, now next is second step is by acceptance. In case of time or users collection, the importer accepts the draft, committing to pay on the agreed upon future date. Now step 6, importers bank releases documents. So once payment is made or draft is accepted, the importer bank releases the documents to the importer. These documents serve as a proof of ownership and enable the importer to take possession of the goods from the carrier like a shipping company. Now step 7, importer receives good. The importer presents the released documents to the carrier, allowing them to take possession of the goods. This step completes the transactions, ensuring that both parties have fulfilled their obligations as per the agreed terms. In next chapter, let's quickly discuss about documents involved in collection. Here are some of the key documents typically involved in the documentary collection process. First is commercial invoice. The commercial invoice is a fundamental document that outlines the details of the transaction, including the description of goods, their quantity, value, and pricing. This document provides important information for customs clearance and helps determine the amount to be paid by the importer. Next document is bill of lading. The bill of lading is a shipping document issued by the carrier like a shipping company that provides evidence of the shipment of goods. It includes details such as origin and destination of the goods, their description, quantity, and packaging. The bill of lading is crucial for releasing the goods to importer upon arrival. Now, next document is packing list. The packing list provides a detailed breakdown of the contents of the shipment, including the types of goods, their quantity, weight, and packaging. It aids in verifying the goods received match with the description on the commercial invoice. Now, certificate of origin. The certificate of origin is a document that certifies the country where the goods are originated. It is essential for customs purposes and may be required to determine eligibility for preferential trade agreements or tariffs. Next is draft or bill of exchange. In the case of documentary collection, a draft is often included. It is a written order from the exporter to importer specifying the amount and terms of payment. The importer either makes the payment as per the draft instructions or accepts the draft, committing to pay on a future date. Next is insurance document, if applicable. If the documents are insured during transit, insurance documents such as insurance certificate or policy may be included in the collection process. These documents provide evidence of insurance coverage for the goods in case of damage or loss during transportation. Next document is inspection certificate. This is also if applicable. Inspection certificate, certain goods may require inspection certificates to verify their quality, condition, or compliance with specific regulations. These certificates assure the importer that the goods meet required standards. Please remember the accurate and complete preparation of these documents is crucial for the success of the documentary collection process. Any discrepancies or errors in the documentation can lead to delays, disputes, or even rejection of the documents by the importer's bank. Therefore, exporters must ensure that all documents are prepared aligned with the terms of the trade agreement. Next chapter is advantages and disadvantages of documentary collection. So, what are the advantages of documentary collection? It is cost effective. Documentary collection is often less expensive than other payment methods such as letter of credit, making it attractive for both exporters and importers. Commission or charges taken by banks are very less compared to other payment methods. Next is flexibility. It offers more flexibility compared to letter of credit, as the terms and conditions of the collection can be negotiated between the parties involved. Next point is lower risk for importers. Importers are not committed to make payment until they receive the necessary documents, which can reduce the risk of fraud or non compliance with the terms of the contract. Next point is minimal bank involvement. Documentary collection involves fewer formalities and paperwork than letter of credit, which can simplify the process and reduce administrative burdens. Next point is it is suitable for established relationships. It is often used in transactions involving established business relationships where both parties have a certain level of trust. Now, let's check what are the disadvantages of documentary collection. Payment risk for exporter. Exporter face the risk that importer might refuse to pay or delay payment after receiving the goods, especially if the exporter has already shipped the products. Next is lack of payment commitment. Unlike letter of credit, there is no bank commitment to ensure payment, which can result in uncertainty for exporter. Next point is limited legal recourse. In case of payment disputes, legal recourse might be limited as documentary collection operates on the basis of trust and negotiation rather than a legally binding commitment. Next point is dependence on importers' cooperation. Successful collection depends on the cooperation of the importer's bank and willingness to release payment upon receiving the documents. Next point is potential delays. The payment process can be slower compared to other methods as it involves physical handling of documents and communication between banks, which could lead to delays in receiving payment. Next point is currency fluctuation. Exchange rate fluctuation between the time of shipment and payment could impact the amount received by the exporter. Now, in the next chapter, I'll be telling you some tips for successful documentary collection. Successful documentary collection in international trade requires careful planning and adherence to established procedures. Here are some key tips for smooth process. First is clear instructions. Provide precise and detailed collection instructions to your bank outlining payment terms, document requirements, and any specific conditions. These details will be mentioned in the covering letter of exporter's bank when they are sending the documents to importer's bank, and importer's bank will act as per the instruction mentioned in the covering letter. Accurate document. Ensure all required documents such as invoices, bill of lading, and certificates are accurate and complete and comply with the terms of the collection. Next is timely presentation. Submit documents to your bank promptly, aligning with the agreed timelines to avoid delays in payment release. Next point is communication. Maintain open and effective communication with your bank and the buyer's bank, promptly addressing any queries or discrepancies. Next point is discrepancy mitigation. Review the documents thoroughly to minimize discrepancies. Address any potential issues before submission to avoid payment delays or refusals. Next point is choose appropriate terms. Select the right type of collection, whether it is DP or DA, based on your relationship with the buyer and your risk tolerance. Next is currency considerations. Factor in currency exchange rates to avoid unfavorable fluctuations impacting your payment amount. This is very important point. If currency exchange rate is increased, then payment value in local currency will be increased. So, to avoid this situation, you may book forward contracts. Next point is build trust. Establish a solid relationship with your buyer and their bank to enhance cooperation and reduce the likelihood of disputes. Next point is risk assessment. Evaluate potential risk and uncertainties associated with documentary collection versus other payment methods and choose the option best suited to your needs. Now, today's topic is completed. Hope you have enjoyed the video. Thank you for watching. Don't forget to like, subscribe, and hit the notification bell to stay updated with future videos. Until next time, take care and happy banking.